Right, since the last card, what's happened? World War III keeps trying to kick off. And we saw what happened the other day. You know, Trump is like, right, we need to get peace. But the Biden administration's just given Ukraine a shitload of US missiles, and they've just fired them, lobbed them over. It's like, God damn it, they're trying everything possible to you know, poke the hornet's nest. BRICS is expanding fast. It's no longer BRICS. You know, it was four of the biggest nations on the planet. There's like a conglomeration of about 30 plus different countries now, and they're all huge. I wouldn't be surprised if the BRICS pact becomes bigger than NATO in many different metrics. So they're definitely all the emerging countries. So not that I play with stocks or anything like that, but you know, these emerging countries are going to have booming industries. UK government, we are, yeah, we're just, the UK is just a joke. And ever since I started calling Keir Starmer Keir Starlin, everything seems to, I've had a really shit couple of weeks. I've lost all my business bank accounts for my businesses. So 3 companies now that have 0 bank accounts. They blocked and froze all my cash since the 13th of September. November, 13th of November. So I can't pay my VAT bill in a few days. I've got like 50, 60 grand worth of bills that are coming out. Direct debits are like failing, and everyone's like, you haven't paid me. I'm like, yeah, I know. So I think on Monday I'm gonna have to sell a bunch of crypto, which is not good. I always try and delay the crypto liquidation as long as I can, but yeah, Santander are absolute bastards. Yeah, so Nationwide have kicked me off. Barclays have kicked me off, Revolut has chucked me out. Like, all banks hate me. Goddamn Keir Starlin. Kamala loves her word salads. I just thought it was amazing. And then, I know this is probably going to divide the room here, but I'm really looking forward to whether you like Trump or not, let's ignore that name. This, in my opinion, is just going to be revolutionary. Like Vivek and Elon basically taking a samurai sword to the US spending is going to be epic. They spend roughly 4 trillion a year. They're going to cut, no, 6 trillion a year. They're going to cut 2 trillion a year in spending like that. It's game over for the incumbent establishment, and you know, they're probably going to be assassinated at some point, or more attempts. And RFK is hopefully going to be taking Big Pharma to town. And so I know some of you will probably hate me for this, but I think this is a glorious picture. This is, yeah. And there was like, you know, someone said, you know, there's no perfect state, and then Oklahoma went, oh shit, shit. Oklahoma was like, hold my beer. So, yeah, Steve, my biz partner, we have opposite views in many things, so he wasn't too happy. You were more of a Kamala fan than? No. Fair enough, yeah. Anyway, so I've pissed off half of the room at least. Let's move on to some charts. And these are the big brain charts. Again, the macro metrics don't really change that much. One of these days, one of these charts is going to bugger off in a different direction, and it'll be quite exciting because the RT members here are probably going to fall asleep at this point, because you heard me say this a lot. So my three favorite big charts, first of all, is the US interest rates, right? The US is still the king daddy of the world, whether we like it or not. So when they sneeze, everyone else catches Ebola. And the Fed funds effective rate, so US interest rates, is very important. So for those who have not, in fact, who has not seen me talk about the macro metrics before? 2, 3, 4, okay. Bear with me, RT, I'm just, so long story short, these gray zones here are where we have stock market crashes / recessions. And this chart goes back to the mid-1950s. And every single time you see a massive run up in interest rates, and then it starts to fall back down, we have a crash. Stock market crash, economic recession, however you want to call it. Every single time. The caveat which played out exactly as predicted recently is that whenever you have a plateauing of interest rates, so not all the time it goes up then down straight away, sometimes you have a little plateau in interest rates where everyone has a bit of a breather. That's when stocks melt up. So we've been saying for years that, you know, if in this case here, if we have a bit of a plateau, stocks will continue screaming north, melting upwards, and then it's when rates start crashing, that's when you need to, you know, not be worried, but just expect some market turbulence. And so that's what we've had. We've had stocks going absolutely parabolic. When you overlay that with the unemployment rate, now I don't believe at all the unemployment rate that they issue, because they have so many bullshit things. Like if you're, I've put it all in my book, but if you lose a job but you're still looking for a job, you're not unemployed. You're just temporarily out of work looking for work. And a lot has to happen before you're deemed as unemployed. But if you're unemployed for like more than a year, you're no longer classed as unemployed. You're just an uneconomically active person, something like that. And so the unemployment figures are just pure ridiculous. It's nuts. Anyway, using the official figures, whenever you see a local low in unemployment rates, guess what happens? A crash. It doesn't make too much sense, but this is what the chart says. Crashing in unemployment rates, so technically that should be a good thing, but it's not. We have a crash. So we now have two big indicators overlaid saying we're due for a crash, because we've just had a local low with unemployment here. Plus, we're having a big hike in rates. And the third one is inflation. When you overlay the green line here, which is inflation, again, I don't believe how the way they calculate this is bollocks. So the way that they measure CPI, the Consumer Price Index / inflation, is they have a metaphorical basket of goods of stuff that people use on a day-to-day basis. But they do hedonic adjustments and stuff like that. So if, you know, cod prices go crazy because we're farming them to extinction from the North Sea, it upsets the basket. So like, oh, we're going to take cod fish fingers out, we're going to put crab sticks in. Yeah, that makes it better. But the thing is, when you analyze every single person's everyday spending, our biggest outlay is rent or mortgage, isn't it? Shouldn't that be in the CPI basket? Yes. Well, it isn't. Not since the 70s. Not since the every man must own his own home regime in the mid-70s with Thatcher and Reagan. So, yeah, they really do manipulate inflation and CPI. So, either way, these three charts, you have a crashing in unemployment, a spiking in inflation, and a spiking in interest rates. What happens? We have a grey zone, which is crash. So we should see a crash like any time now, like any time over the next 12 months, really, which, yeah, it's a tricky thing to navigate. And a lot of people look at the PMI index. So this is the US Purchasing Managers Index. So this is a nice barometer of industry, because when stuff is going well and there's lots of liquidity, big companies like to place big orders. You know, car manufacturers will buy a huge amount of, you know, metal and steel from China or India, etc. So the purchasing managers are doing stuff, right? And you can see it's pretty cyclical. And again, this goes back to the last 40 odd years. It's very cyclical, and that's because this is really overlaid on top of the 5.5-year global liquidity cycle. So really, this isn't, you know, you have to always be aware of coincidence, correlation, and causation. You must, whenever you look at things which look familiar or similar, you don't always jump to the causation fact. It could just be coincidence. So coincidence, correlation, and causation. Always keep that in your mind. So the reason this is cyclical is because of the global liquidity index. So these are the 4-year halvings for Bitcoin. And again, it just happens that at the moment, the Bitcoin 4-year cycle is again in lockstep with that. And when you put in Bitcoin, this is what happens. You have the halving, a low in PMI, and then halving, a low in PMI, then and so we're just waiting for the next which is like because we've got a low in the PMI here. So stuff is still working. I know a lot of people say all these cycles don't work, it's just coincidence. Or yeah, at the moment, like with anything in trading, you got to ride the trend, right? And the trend is still, it's still in lockstep. So we're just going to milk these cycles and these trends until the trend breaks. Then we'll pivot to the next model. You've got to milk your models. So this is the scariest chart, in my opinion. This is the spread between the 10-year and the 2-year UST notes. And this is what a lot of the bigger boys look at in terms of the risk of a crash. And I've been following this for years, and you probably can't see very well, but there are these blue lines here. This is my projected price action that I've put on. I put it down here when it was still coming down. And I said, over the next couple of years, we should see a V reversal, and it should start moving up to here. Now, the reason this is important is that you have this big line across here, which is the 0% line. And every single time this spread hits the 0% line, it normally V reverses, and then we have a crash when we get to the 0.25 sort of red zone. So these are just the zones I've drawn in, but every single time we've had a reversal back into this red sort of band, we've had a stock market crash. These big ones are the stock market crashes. And so this, literally every couple of months, we look at this chart and I go, holy shit, it's following my ghost feed like almost exactly. It's a little bit to the right, so I'm probably, this is too eager maybe, but it's only a couple of months out. And we are literally just tickling the edge of that hole there. So how long will it take to get into this bit here? Again, everything points towards 2025. And the last cuddle, we talked a lot about crashes, where and the timing of the crashes and what we do. So I'm not going to talk about that today. And again, I like superimposing Bitcoin on everything. No, this is the S&P 500 actually, this line here. You can see that during these red crashes, economic recession zones, the stock market crashes. But you don't need to worry too much. Long story short, don't worry, because the amount of time a stock market takes to crash is compressing every single time. Crashes used to take forever, like 2-3 years to play out. These days, it's probably going to be 3 to 6 months of panic. They'll press print, 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 every central bank, and then everything is V-reversed back up. So, yeah, I mean, the last time we had this phenomena was during COVID, and then we just printed $5 trillion out of our asses and pumped it into assets. So global liquidity is still picking up. This shows all the central banks across the world and their appetite for liquidity. Red means that they're tight, they're doing QT, quantitative tightening. But what you can see is a lovely green hue coming. So they're not printing yet, but they're slowly releasing their grip on liquidity. And eventually, give it a year, we'll look at this chart again. There won't be any red, it'll just be green. And this is the 5.5-year liquidity cycle. Again, every cuddle, this line is just creeping up and up and up, and we're just waiting for this to keep on, just getting around here. There is a lag between this liquidity chart and prices for assets. Give it, maybe a 3 to 9 month lag, but it's not much. Again, and this chart controls the whole world of economics. It really does, because there's $350 trillion worth of debt sloshing around the world at any point in time, which means every single year the world has to refi $70 trillion. And so we only have stock market crashes when there is an inability to roll over debt. That's it. So if there's any liquidity scare and we can't roll on $70 trillion worth of debt for another year or 5, stuff happens. And so again, everything's pointing to a crash in 2025 or 2026 time. And the thing is with these big macro metric indicators is that stuff can sometimes take a lot longer to play out than you think. The Big Short is a great example. Michael Burry and all those really clever folks back then, they saw the writing on the wall with the subprime mortgage collapse in 2005. So Michael Burry started shorting everything from the end of 2005, but it just went on for another 3 years. And he was bleeding for 3 years with his reputation in the gutters, and then he was like, hey, made billions. So yeah, this could drag on for another year. I hope we have the crash in 2026, because then it'll be a lot cleaner for our crypto play. So then, other than that, same. Again, the other big charts, you have US debt and USM2. This chart will only continue getting bigger, okay? This is just maths now. So debt will continue to be in exponential growth, and USM2, the currency supply, that will continue in exponential growth as well, but not as fast as US debt. There's no way to make these 2 points meet, really, unless the US buys 2-3 million Bitcoin, and Bitcoin pumps to 10 million each, and then, you know, like, that's the only way you can wipe out the US debt. The US debt is around, what, 36 trillion? 36 trillion. So, yeah, if the US bought 3 million Bitcoin and then pumped the price up to about $12 million per Bitcoin, they could wipe out $40 trillion worth of debt and be completely debt-free. That's what I would do if I was dictator. I'd force the Bank of England, stop all debt repayments to the world. They can go shove it. All they can do is invade us or put sanctions on us. Okay, bring it. We've got the SAS and SBS. But they won't do that. I would just pause all payments and force the Bank of England at gunpoint to print as much pounds as possible and just pump it straight into Bitcoin. And then we'll probably have 5 years of pain and everyone hates me and whatnot, but forcing the central bank to, oh no, we wouldn't let the Central Bank of England own the Bitcoin. We'd make them print the money, then we'd buy the Bitcoin. But yeah, you could get rid of national debt just by doing that. And then if you had, like, say, a currency which is somewhat backed by Bitcoin, or fully backed by the Bitcoin, every time you printed more currency, it would pump the price of Bitcoin as well. So you can then create cash or expand the currency supply without increasing debt. Like, yeah, there's so many thought experiments that you can do. It's just, yeah, it's amazing. Right, US GDP is still going up, but at a lot slower rate than debt, because debt is now starting to get its running boots on, and yeah. Budget deficit. So I have always said this will continue to go down forever, into the red. But now that we have Vivek and Musk on the Department of Government and Efficiency, then hopefully this will start going back up. I'm not even American, but I feel proud of America for what they're about to do. We'll see. Time will tell. Budget deficit as a percentage of GDP doesn't look good, but hopefully, again, fingers crossed, I'm actually quite prosperous on the US for once. I've been very negative on the US for the last 10 years. But yeah, hopefully all these, exponential charts start to come back down again. And then whilst I was doing these slides this week, I was like, I wonder what I talked about on the November cuddle last year and the November cuddle a few years ago, because I normally give out like predictions and stuff, and I was like, I never actually check what comes true. And I found some videos of 2022 November. I thought I'd play some clips.
So I think we are still on track for hitting point 12 down here this month. So this is why I've been saying between mid-November to early December, we should hit the low. That's what I'm working to.
This was in the bear market. And then, so they're saying this month we should hit the low, and then boom, 21st of November, we got there. It wasn't as low as I'd liked, because I was looking around 12K, but yeah, we had that low, we had that 0.12 there, and then it started moving up.
Basically, volatile ranging market. So although it may bottom out at, say, 12K, let's just pluck a number out, by the time it does its next halving, we could see up to 40K, but I reckon it's just going to be it will be oscillating up and down. So there'll still be tradable opportunities. I reckon you can still 2 to 5x your pot.
So I was correct and incorrect there. Yes, the yellow phase was great. So this is what that chart I was showing there. We hadn't bottomed out at that point. I was wrong in the fact that we were more like 60K by the time we hit the halving. And it wasn't as choppy as the previous yellow phases. So the yellow phase typically is choppy up to the halving, and then boom, crazy zone. The yellow phase that we've had this time round has just been really just a diagonal line up. it has been choppy. Here you can see this is what was actually happened. So by the time we hit the halving, it was 64K. I was expecting 30, 35, 40. But yeah, a lot of the, my fib, my 38.2 fib regression hit. So one of the other things I said is that 6 months up to any time within 6 months up to the halving, it normally hits the 38.2 fib regression from the previous high, which is this orange line. And it always hits this line at some point 6 months prior to the halving. So yeah, so at the moment, whether you like it or not, these cycles are still working for the moment. And that was sort of what I was expecting. I had these two holes around the 12K area or even around the 9K area, because I was just looking at these support levels. We actually pivoted pretty close to 15, so it only went down a little bit, and then, but the price action thereafter was pretty similar.
But as I said, spot ETFs is where things, everyone will be a trading god when that happens. If you are just in crypto before spot ETFs are allowed, everyone, you can get a blind monkey to pick some crypto, and that blind monkey will do well. So, yeah, this will make everyone look amazing.
2 years for that. It was January this year that spot ETFs were approved, and then it's been the fastest growing ETF in history by a country mile. Prior to that, the gold ETF in 2003, iShares GLD was the biggest. So that's where we are now. These are my cycles. We are here. Whoa, wait a minute. This chart is out of date. Bitcoin is 89K when I took the screenshot. It's tickling 100K right now, isn't it? On various exchanges, it's hit. Yeah, I'm looking at the Coinbase one. We've tickled it a few times, but we haven't quite breached the 100K yet, but we're getting there. It's a very happy time to be alive.